Hey Crypto fam, welcome back to the Cryptocurrency Beginner's Guide to Cryptocurrency and Blockchain, where over the next 10 weeks we will get those foundations, those key concepts, and you can start on your crypto trading and investing and learning journey. I am fostering two 6-week-old kittens in this room right here, and I just heard a lot of noises. That means cleaning for me in a moment, so that'll be fun. I have been getting so many messages of support and willingness to learn and excitement, particularly from women. I love that you're open to the crypto and blockchain space. We are vastly underrepresented as women in finance, women investors, women who are even thinking about these things or starting to learn about these things. But you know, if not now, then when? And I'm so proud of you. And to everyone watching, thanks so much for coming back to week 2, and let's get into it. So I will pop the link to this schedule and further information in the comments, but you guys know the drill. We launched last week, week 1. Over the next 10 weeks, we will be learning crypto and blockchain. The reason we've done it over a 10-week spread is because I've spent the last year figuring out what is the best way to get someone who is new to really finances, stock market, investing, everything, but who's really interested in the idea and probably connecting with many concepts of crypto. So that's what we're doing. We're learning about these foundations, these key concepts before we dive into crypto and blockchain. And throughout these 10 weeks, we'll be learning about what's happening politically around us that is influencing the price and the progress and the pathways of not only our current financial system, centralized finance or CeFi, but DeFi, which is decentralized finance, which is the sort of crypto blockchain emerging financial world. So as I mentioned, if you haven't already, head back to the intro episode and episode 1, key concepts. Let's get into episode 2, cryptocurrencies. So there are over 18,000 cryptocurrencies, with Bitcoin and Ethereum leading the charts. If you want to have a look at all of the cryptos by market cap, head to coinmarketcap.com. Why are there so many cryptos? So the reasons for the existence of so many cryptos ranges from their use case, their consensus mechanism, the inherent utility of the coin, and market competition. So remember last week we talked about how when you're putting money into a crypto, really what you're doing is investing in a team, a project, or a company, or really a problem that they're trying to solve. So there are different kinds of categories of cryptos. So that goes to the utility of the coin. Why are there so many different ones? Well, a lot of the different companies are trying to tackle different problems, and they've invented a cryptocurrency as a way to fund that cause or that problem that they're trying to solve. For example, VeChain with its native cryptocurrency VET, V-E-T. VeChain is a cryptocurrency. I've been talking about it for over a year. Love VeChain. Supply chain. You guys have heard that for a lot the last few months. Supply chain crisis. A technology or a project or a company like VeChain, what that can do, what it's aiming to do is organize our global supply chain and logistics processes. What they're trying to do is have all of our goods and services trackable and traceable and organizable, and think about how much less chaos we'd have in the supply chain management world if there was a technology, a network, and company and currency like VeChain on the job. So that's just one example, but there are tons of different categories of cryptocurrencies, what they're focusing on. There's gaming, DeFi or decentralized finance, which we'll talk about a lot. There's cross-border payments and payments networks. There's tons of different areas that we're going to learn about. So in week 1, we learned a little bit about Bitcoin or BTC, the #1 in market cap cryptocurrency, also the first widely accepted digital currency. Not the first digital currency, but the first widely accepted digital currency using the blockchain. Really, really important. Remember we talked about how a mysterious inventor called Satoshi Nakamoto released a white paper explaining, hey, I have this idea for this blockchain technology that is a way for the world to send money on a peer-to-peer basis. Over a third, I think, of the world is unbanked. So what are they meant to do? We're fine because we have banks, but what is the rest of the world meant to do? Well, with a technology like Bitcoin, they could now transact. And think about the value that that transaction gave to those people, their families, their communities. The ability to buy and sell goods and services and transact without opening a bank account and they're unable to open a bank account. So Bitcoin was the first widely accepted digital currency that introduced the world to this idea, introduced us to this peer-to-peer payment system. So Bitcoin is an interesting one because we talked about how it's limited to 21 million Bitcoins, right? Which means that the more that are mined and the more that we buy, and some people are, hoarding, investors are hoarding, they're buying up, countries are buying up Bitcoin by the bucket load. So what is going to happen when that 21 million has been mined and we've reached that cap? The value of all Bitcoins that are out there will increase because they will be more scarce. And that is already what we're starting to see. So when you hear people refer to Bitcoin as a store of value, that's what we're talking about. We're buying it, its price is going up. We as a collective clearly value it for some reason because we keep buying it even as the prices go up. So think of Bitcoin in some ways like gold, digital gold. Many people refer to it as digital gold. It's a digital store of value. Bitcoin. In fact, in my opinion, as we go on, Bitcoin will be seen more and more as a store of digital value or a store of value. And while it is not the best for cross-border payments, there are many other cryptocurrencies that are building the real infrastructure and the relationships for that. So that's why, in my head, and many others would agree, Bitcoin is there, and its price and its value and what's happening represents what we think of what is happening with cryptocurrency. Billions and billions and billions of dollars every week are being funneled into crypto teams, projects. If you are thinking of changing your job and you have any kind of software dev or coding or any kind of experience and you haven't looked at the crypto market for that yet, that'll give you an idea. The market is hot for people in crypto and tech. We're moving towards appreciating Bitcoin as more than just a gimmick we heard about 12 or so years ago, right? Things are changing. Number 2 in the top 2, Ethereum. Truly is a worthy competitor. So Ethereum is a crowd-funded, open source, public service platform that uses the blockchain technology like Bitcoin to facilitate smart contracts and cryptocurrency trading securely without a third party. What does that mean? Ethereum has taken many of the concepts of Bitcoin because of its use of the blockchain technology. Things are open source. Things are decentralized. Developers that are now building on the Ethereum network, there's tons of businesses that can be built on it, right? Unlike Bitcoin, this is more of a platform, an ecosystem. So people are building on Ethereum, people are building whole new sets of systems and trades and lending and gaming, and there's tons happening on Ethereum. Really busy. So Ethereum went live on 30 July 2015, and it was started by Vitalik Buterin and a number of other programmers, a small team, but genius team. Vitalik was like 21 or something insane when he started Ethereum. So I have a lot of young followers, and I don't want to hear that you can't change the world. I don't want to hear that your ideas don't matter, because a 21-year-old man and his team who just loved Bitcoin and loved crypto and loved what this technology could do for our world, he can do that. So what can you do, So we're gonna pause for a second and just learn a little bit more about the terminology I'm using. So when little key phrases stick out and I focus on them, it's probably because they'll come up about 100 times in your crypto journey. So Bitcoin, store of value, kind of perception over there. Ethereum, stuff happening on the Ethereum network, lots of smart contracts. So what a smart contract is basically a technical capability that will allow the blockchain technology to carry out what we've programmed. So that is how this financial ecosystem business world is going to run, is through smart contracts, which let's look at a really, really simple example of what a smart contract is. Because remember, with Bitcoin and Ethereum and cryptocurrencies, what we're generally talking about is decentralization, and basically you're cutting out the middleman and you're doing things for yourself, right? Because you can, because the tech will enforce it and will, if done right, keep people's rights safe, keep the agreement that you agreed to in place and hold every party to it. Which, if you look at a lot of the problems in our world, a lot of that is because people and companies and countries don't do what they say they'll do. Blockchain technology will enforce it. There is no need for them to not do the thing and us to spend 3-4 years in court saying, you said you would do this thing, why haven't you done this thing? The blockchain will do it, right? So little Bob here wants to sell his house. John wants to buy that house. Love that for them. They can't be in Sydney because Bob and John have matched up online. They've said, Bob's gone, here are the specifications to my house. John's searched for those things. He's found this house and he goes, great, perfect. Bob likes John likes Bob, house sold, house buy, whatever. The smart contract receives the assets. So through the digital programming of the smart contract, which really, like you would go to your lawyer to draw it up, you'd go to a developer. A developer would have programmed these things, this transaction. So the smart contract would receive the title of the house, the deed to the house, which real estate is all going to move onto blockchain eventually, so this is just the initial start of it. So the title of the house is held in escrow or whatever as part of this contract. The smart contract distributes the assets. So the smart contract is programmed to digitize this land deed, take the money from John, transfer the land deed from Bob to John. The settlement is automated because of these technical controls. Things are done, and therefore on the blockchain it is now recorded publicly, immutably, unchangeably. Remember these concepts of blockchain. It's on the record. Anyone can go look who owns this house. The house is now in John's name. If John has paid, then John owns the house. That's it. The smart contract will enforce that, as simply as that. Now, in that process, this is a good example of why blockchain, because in that process of John buying Bob's house, we have cut out 2 lawyers on each side, a conveyancer. They've not had to go down to the bank and say, hello, can I have my land deed? And can you please put it in this person's name because it's the 1920s? What are we doing? And that is the power of a smart chain. You'll see me get real passionate about crypto and blockchain, because when you start learning about these things and I go outside and I look at the real world and I'm like, everything is so slow and broken. And we don't need all these people and all this time to do these things. So just a quick recap of Ethereum and Bitcoin. Remember, there are different cryptocurrencies, different blockchains, really aimed at doing different things, really kind of have a different market in some way, and also have a different way of creation. So remember that these things are systems and networks, and they'll need upgrades and forks and changes. And many of these forks and various changes have been controversial, but Ethereum moving to Ethereum 2.0, pretty uncontroversial, has been in the works for a long time. Basically, Ethereum changing to Ethereum 2.0 or ETH 2.0, which some aspects have already started. We're expecting the further phases next year and possibly beyond. But the main technical change is that Ethereum is moving from proof of work, which is the consensus mechanism. What that means is basically just the way it's created is moving from proof of work, which is Bitcoins. When we talk about mining, that's through proof of work, to something called proof of stake, which means that it won't be mined anymore, it will be staked. So this is a technical upgrade that it's hard to visualize because you're like, this is just words on a screen and it's moving to this and this. But think of this, there's thousands of developers right now working around the clock, recoding and rechanging things so that Ethereum as a platform can move from one consensus mechanism to another. There are a ton of reasons for this. Some of the main reasons are for energy efficiency, it's better for the environment, and it will significantly reduce the transaction processing time and cost. I am sure even if you're very new to crypto, you would have heard people say the gas fees on ETH. So basically the cost of doing transactions, doing trades, doing things on Ethereum is really high at the moment, and the aim is obviously for it not to be. So these upgrades need to happen. Remember, we're at the early stages of these companies and projects, and we've got a lot of work to do, but it's exciting. There's money to be made now and later, and knowing and starting to learn about these things now is very, very valuable. So ETH 2.0, let's do it. So Bloomberg has described Ethereum as the hottest platform in the world of cryptocurrencies and blockchains. That was a quote from a while ago. Actually, recently, last week, read their report, Crypto Outlook in 2022. If you're not following me on TikTok, get over there because I chucked it on there. They are bullish on Bitcoin and Ethereum. They recognize the value of Ethereum as a decentralized global computing engine, an openly verifiable data store. Big words. Summarized, what that means is Ethereum, very attractive to build projects on. A lot of growth predicted by Bloomberg. Not financial advice. So let's go back for a sec and recap on the benefits of cryptocurrency. So accessibility. Remember I mentioned the billions of unbanked people around the world that can now transact. How amazing. Fraud proof, because everything is on that ledger. Remember, I can search and say, who owns that house? John owns the house. Okay, cool. You can do that, I can do that. If Bob comes in and says, no, I own the house, I'll be able, any one of us will be able to look and go, you used to, but on this date, because the transaction is recorded on this date, it went from you to John. That, imagine what that can do for businesses around the world, people around the world. Fraud proof. Every confirmed transaction is placed on a public ledge. Ownership. You own your account, you own your funds. There is a lot more responsibility with blockchain. You have to remember your password, your keys, all this stuff, but it's in your account, in your wallet, in your name. Identity theft. Crypto is in many ways more secure than traditional finance. That is true. Instant settlement and easier transactions. Cryptocurrency cuts out the need for working and paying several middlemen during a single business transaction. We saw that with the example with John and Bob. One of the biggest problems in cryptocurrency is because it's so new and people are new to it. Scams and tricks and phishing emails and fake exchanges and clickable links and fake projects are rife. It is so easy in many ways to make money with crypto. It's easier to lose it. It is easier to lose it. And none of this is financial advice, but I would not be a good crypto educator if I did not spend some time going through the risks of crypto and how to stay safe in your crypto trading and investing journey. So let's talk about the risks of crypto. Risk number one, the hype cycle. There is a lot of hype surrounding crypto. Many people who invest in it don't know enough about what they're investing in, so instead they listen to the crowd. So before I tell you what we can do about this hype cycle risk, and really what it comes down to is you get excited and you put money in this coin without really researching it, but everyone's talking about it and you're pretty sure it's gonna go up a lot. So let's go in quick. And yeah, so what we can do to avoid this hype cycle risk, and this probably comes with time, but these skills are important. Doing your own research, being able to ignore the market noise and hysteria, and studying the specific cryptos you are purchasing. Debating whether to share this story with you guys because I feel like it might damage my credibility a little bit, but I will share it. Let's do it. One of my first crypto scams that I fell for was probably related to this hype cycle risk. Got too excited by Ethereum Max because Kim Kardashian posted about it, and I was like, oh my god, I don't even really care about the Kardashians, but I think I just got so excited. because I was like, it's in the public, mass adoption is coming, and sports do well, and Ethereum Max, it's got Ethereum in the name, and Max, it's got Max in the name. That sounds sick. Let's do it. Anyways, it was a fake platform, put in my address, and they took that Ethereum. Anyways, next slide. Now, if I had known how to research a cryptocurrency, I might not have done that. So this is one of my many infographics. Head to my website. I've got them all there on the tools and resources tab. You just hover on that and click infographics. This is how to research a cryptocurrency. You know, when influencers like, do your own research, you're like, but how? What does that mean? What am I researching? Okay, well, this is what we're doing. We're looking really at the real world industry, starting with industry research, right? What is the problem that they're trying to solve? What kind of industry is this coin in? Is it related to the metaverse? They're going to be hot over the next few years. Is it related to this? Oh, will that be profitable? Is it related to this? You know, what's happening? What does it want to do? Then we can look at the team size and experience. So in the crypto space, founding teams often stem from the same company, startup, or college, and many crypto projects are under development at the time investing in the underlying cryptocurrency. So you'll start researching various cryptos and you'll see like a lot of the leaders have left that one to start this one, and you know, having those links and knowing that that is an experienced team who's worked on that project and that's done this, that gives you a little bit more information to go off, right? Funding. Finding out whether the company behind the crypto project has previously raised venture capital and or private equity. Basically, where are they getting their money from? Is it just you buying the coin? Is that where they're getting their money from? Or do they have institutional investors interested in what they're doing? Do they have VCs that believe in the team and what the team might be doing? Is this basically a real project with an office, with a real world solution? Or is this a college stock bro who over the weekend has decided to start up a crypto and share it with all his like rich stock bro buddies and pump it up? Like, what are we looking at here? Use cases. So it goes back to what will the tech do? What is the real problem it will solve? Therefore, why would we value it, right? Why does it matter? Is it doing something in industries like travel, infrastructure, healthcare, mining? So remember, take a step back and think about our world is changing, industries are changing, things are coming online, and lots of companies will need to come in and fix the problems in that process. And as part of those companies, what you could do is invest in them. And if they have a cryptocurrency that facilitates whatever they're trying to do, you can invest in that. So that's just asking yourself, you know, what is the use case? What is this going to do? Do I believe in that? Do I think this will do well? And then looking at their roadmap and the key dates. So for traders and investors, it's definitely, so short-term and long-term, it's definitely worth knowing what's in the pipeline for projects. So if you think back to how I talked about ETH 2.0, that's an example of knowing what's in the pipeline for Ethereum. So when ETH 2.0 at the next upgrade, will we see a rise in price? Probably, because we're seeing better functionality. We're seeing it doing different things in a better way. So we can speculate that that will rise the price. So do you see what the process is? We're expecting that price to go up. So we want to invest in it before then. And when that goes up, if it goes up, again, not financial advice, but this is part of the, you know, knowing what's coming ahead. Are there cool partnerships coming up? Are there big changes coming up? What do we want to invest in before it, you know, gets big or gets better? Or do we believe in it for the long term? Either way, it is definitely good to have a look on the Crypto Coins official website. If you head to CoinMarketCap, they will link the website and the official contract. Just make sure you're getting your research and whatever from official sources, the official site, the official white paper. And when I use terms like this that you're a little bit unclear on, remember that I have a free glossary on my website that defines terms like smart contract, white paper, stuff like that. But these are all things that we can look to help inform our investing and trading decisions. And when you know more, you do better, right? So when you know all these things, if I had done this, I would have gone maybe. Ethereum Max seems like a kind of like hype cycle risk right now. Anyways, and that's how you research a crypto. The security risks and scams, hacking and theft are ridiculous in crypto. They are out of control. They have been a common theme in the crypto market since 2009, but it's like they're getting smarter and smarter. It's insane. So here are the three main ways your cryptocurrency can be compromised. The first way is the cryptocurrency itself. So this one's a little bit tricky because sometimes it will rely on a technical understanding, but if you are a technically minded, if you're a developer, you can look at the contract, look at the protocol, look at whether there are traps. That's probably a little bit more advanced, but for now, for a beginner, you can just be aware that, do your research on the cryptocurrency itself. And then another way that your cryptocurrency, your money, can be compromised or stolen or hacked or whatever is the exchange itself. There have been so many security incidents and data breaches in relation to exchanges. So the first step is making sure that your exchange is trustworthy and credible. There are tons of exchanges out there. The ones I'm currently using are linked on my website. Those are ones that I trust, that I've done research into, that I've looked into enough that I feel comfortable using them and referring you to them. Please use my referral link so that you can support me as well. And the third way that your crypto can be compromised is three main ways, is on your crypto wallet. Online wallets are very attractive to hackers. So your coin information stored with that third party, your wallet, they can be really vulnerable to malware and hacking and things like that. So it is very important to choose your wallet wisely, and we will talk about that in coming weeks. Pump and dumps in crypto or the stock market or really any asset that you're trading on, they are a coordinated market manipulation. So a pump and dump could be that crypto bro that I mentioned starting that crypto in his college dorm room, and he tells all his friends from Harvard, and they say it's going to launch on this date. Tell everyone, buy a bunch, tell everyone, we'll buy it at this time, we'll buy it at this price. The idea or the hope is that they'll get other people to buy into it while people are buying the coin. That shows the tech, oh, these people want this coin, they value it, the price goes up. And then the people who are in at the start, the crypto bro in his college dorm room and his tight-knit friends, they go, okay, bye, and they close. That is a pump and dump. They go off with all that money that everyone's been putting into this. It's interesting because then the price, the pump and the dump, right? The pump dies almost immediately after the group has started because they're all trying to jump ship once they've made profit. But if you're going to engage in a pump and dump scheme, ideally it's a pump and dump. I mean, each to their own, but you can make money on pump and dumps. And the idea with trading, whether it's a pump and dump or not, is to ride the wave. Buy low, sell high. You buy here, you buy this college bro's coin at 1 cent. He's told everyone the price is going up here. It's now at 10 cents. You've made like a lot of profit. You've bought a bunch of them. So you've made a lot of profit. Going up a little bit more. It's still going up. They're still talking about it. And at about here, you're like, I'm going to sell. You sell. Okay. You've made this much profit. And what happens here, if they decide to do that, is the dump aspect. So dump, which means they sell. They sell a bunch high. And so they've made a lot of money. And, we've sold. We don't want it. We don't value it. The price drops. And now what's happened here is the group of people that have bought a bunch and they're like, now it's like I've lost money. And that is a pump and dump. So the idea is you want to be these people and not these people, the ones left holding the bag, You'll hear that, that's a crypto term. You don't want to be left holding the bag in a pump and dump, and that's a pump and dump. A rug pull, kind of similar concept to a pump and dump, although I would say much more malicious. A rug pull is a malicious maneuver where crypto developers abandon a project and run off with investors' funds. We've seen a bunch of them this year. We've seen some multi-million, tens of millions of dollars of rug pulls, and we'll never see those people again. Sorry, but if I've run off with $32 million, I'll buy a new identity, a new face, a new group of friends. Done. Bye. I would never do that, obviously. Rug pulls usually happen in the decentralized finance or DeFi ecosystem, especially on decentralized exchanges. We will get to decentralized exchanges in week 5, chapter 5. Episode 5, as you know, these YouTubes correspond with my book, which is coming out shortly. I think we're probably not going to head into decentralized exchanges yet, but be very, very careful for rug pulls on DEXs. So similar thing, a bunch of people have bought, there's a lot of money here. Okay, I've written into the contract that none of these people can sell. They don't know that. They just bought the coin wanting to make a bit of money, and I've made all my money, and now I'm going to withdraw that money, and they can't sell even if they get an inkling of something might happen. Too bad, that's mine, bye. And that is how easy a rug pull can happen, which is why stick with me and be careful. Okay, so what can you do to avoid some of these scams and risks? Well, you can start by looking out for the red flags, things that should make you pause and go, let me just check back to what Cryptocurrencies was saying about that. No white paper, mysterious or unknown team, incomplete documents, incorrect spelling. Again, is this a genuine company team project, or is this some guy looking to make a quick buck? Storing your crypto safely and securely on wallets. We'll talk about that in week 7 and 8 and a little bit before then. Adding second layer security to your devices and to your logging into your platforms. So 2FA, two-factor authentication. So on my phone, when I want to get onto CoinSpot or Coinbase or CoinJar or pretty much any other platform I use, I have two-factor authentication. On some of my platforms, I have like multi-factor authentication. On Bitrue, I want to trade and I open up my Google Authenticator or other authenticator app that you can download from the App Store. You put in the numbers, you've done multi-factor authentication before. It's basically, you know, just confirming or authenticating that it is you from more than one place, which is a great protection because if it's not you on your phone trying to get into your exchange, withdraw your money to their bank account perhaps, wouldn't you want your phone to be like, let me just do this quick check just to make sure it's her or him. Keeping track of your wallet transactions and watching out for suspicious activities. Keeping track of the latest scams and hacks. Check out these sources: CoinMarketCap, TradingView, Lunar Crash, Crypto Twitter, other sources. There are just basically keeping an eye on what's being rug pulled, what is being pump and dumped, and that just goes back to doing, it doesn't need to be extensive research, but if you're gonna put your money into a project, remember, go back to my slide or my infographic on how to do research. And double and triple checking contract and wallet addresses when sending crypto. This one, I'm sorry, but I guarantee this will get everyone. When you send money, you've got your contract address, basically, or your wallet address. And we'll talk a little bit more about that later, but your wallet's where you keep your crypto codes, basically. Check where you're sending money to. It's just a bank account. You know, if I have my BSB and account number, you have your BSB and account number. If I want to send you $100, I will check that BSB and account a few times, you know, before I just send money off, because maybe you can get it back, with your bank, you cannot get it back with crypto, okay? So just be very, very careful where you're sending money and where you're telling people to send your money to or your crypto to. Stay safe out there, guys. It is tricky. So volatility risk is another risk inherent to cryptocurrency. Because this is a new asset class, it's a speculative investment, all that stuff, you know that stuff. Volatility relates to market movements. We're gonna see a lot of price action up and down rapidly. You can make and lose money in a volatile market very, very quickly, right? The more volatile a crypto's price is, the greater movements in price up and down. What you can do to avoid the risks in volatility, aka losing your money in that volatile market, is always consider and update your risk profile and trading strategy. So when things change, when your finances change, when the world changes, check in with yourself, your trading and investment plans. Is this still right for me? And update that risk profile and trading strategy. We'll talk about trading and investing strategies a little bit later. We're not going anywhere until we cover all the risks. Making your trading and investment choices based on all of the information at your disposal. Remember, research the cryptocurrency. Don't cherry pick what appeals to you. There are many projects I have put money into because I want them to work. I believe in what they're doing, but don't cherry pick what appeals to you. Do your research, be realistic, check in with yourself and think about, okay, what do I believe this is really going to do? If it's going to be volatile up and down in the short term, okay, I might want to do some day trading or swing trading, short-term trading. Is this going to be a long-term hold for me? Yes. Do I believe it's going to last for a long time and exist in 5 or 10 years? Yes. Then the volatility doesn't really bother me, which is why, you know, on TikTok, everyone, Bitcoin's down. Okay. I think Bitcoin will hit 100 next year. So the whole 47, 50, 51, 40 doesn't really bother me. I don't even check it anymore because it's a long-term hold for me. So you see what I mean by knowing the volatility or just understanding that that's a risk and thinking about how you want to action that. Do you want to trade, make some money on the upswings, downswings, sell, whatever? Or do you want to recognize that it's a volatile market, but overall you're kind of expecting it to be here, so this doesn't really bother you? But again, all of this is speculation, but so is the stock market, so is anything in life. Don't trade anything you aren't willing to use. And planning your trades and using stop loss orders to limit losses. We'll talk about that later, but if you're ready to start trading, head to it and start looking at stop loss orders, limiting losses, the technical controls you can do so that when a price goes down to whatever your stop loss setting is on your exchange, it'll sell it automatically so that you don't check your account in the morning and you've let the price go all the way down here and you hold this much of a coin and you haven't sold and now the price is here and nobody wants it, so you're stuck with it. That's the point of a stop loss. It's basically just a mechanism of protecting yourself if you're not looking at the crypto charts every few minutes like many of us. Liquidity risk is the risk of not being able to sell or liquidate an investment quickly enough to prevent or minimize a loss. So think back to that example where I gave of that rug pull where the creator waits until there's a certain amount of money in a project and investors start feeling, okay, you know, I've made a bit of money in this, I want to sell now. Sell, can't. Because the creator is written into the code, you can't sell, which can happen. That is what we call a liquidity risk. It can also be seen as in there's just not enough money in the market, not enough liquid cash to be able to make that trade. We'll talk about liquidity a lot more in the future, but just be aware of liquidity risk, which is the risk of not being able to sell or liquidate an investment quickly enough to prevent or minimize that loss. So what you can do to prevent liquidity risk is when choosing a crypto to trade, consider its liquidity by analyzing its acceptance, popularity, and the number of exchanges it's been traded on. For example, if I wanted to sell some Bitcoin right now, I know that I would be able to do that because there is liquidity in the market. There is someone willing to sell it, willing to buy what I want to sell, this Bitcoin, at a fair market price easily. That means that Bitcoin is liquid. That is what that boils down to. Lesser known cryptos could have a lot of upside potential, high profits, high risk, high reward, but could put you in trouble because of lack of liquidity. This one comes in a little bit more when we start talking about DeFi, decentralized finance, and decentralized exchanges. But liquidity is one of those terms that will pop up a number of times. So good to be introduced to it now. So let's talk about our last big risk here. Regulatory risk. One of the initial attractions of cryptocurrencies was their lack of regulation. This means investors faced little regulatory risk, which is the risk that a change in laws or regulations will materially impact that coin or security or business or sector or market. So as you guys would know by now, crypto is a relatively new market or space that many regulators and countries are still learning about. I talk about regulatory risk and regulatory responses and developments to crypto a lot on my TikTok, and I'm going to start talking about them a lot more on YouTube. But right now, I would say for a beginner, all you need to know is that countries and regulators and lawmakers are all still figuring out what they want to do about this whole crypto thing. Different countries are taking different approaches, and we're going to continue to see that. On one side, you've got El Salvador, that is mining Bitcoin from a volcano using geothermal energy, creating a new financial system for its citizens. It is paying its citizens in Bitcoin. It is buying Bitcoin as a country. It could not be more Bitcoin progressive and wanting to use this as a tool to better their country. And on the other side, probably China. We've got crypto's banned, crypto's on, crypto's banned, crypto's on. And in the middle, we've got all the countries and regulators going, so this whole crypto thing, bit risky for our banks, isn't it? Because I think people are realizing that we don't need them, or that we don't need a random intermediary that's gonna help me transact, help me send money from this person to this person, take like a ridiculous fee for doing it, don't actually need you anymore. So many countries are figuring out, okay, well, we don't really like it, but it seems that it can't be stopped. So how do we regulate this? And it's really, really exciting because we're seeing them figuring it out just as much as we're kind of still figuring it out. So if you ever feel a bit clueless about crypto and you don't know what the deal is, don't worry, because you're not an American senator that has to regulate this and like is 90 years old and just learned what the internet was. So you're doing good. So what you can do to be careful around this regulatory risk, you've put a bunch of money in this project and a regulator might come out and say, oh, you can't trade that. Are you scared you're going to lose that money? You know, that is a risk. So what you can do is assess the risks, including the tax risk, posed by proposed changes to the regulatory framework, what changes might be coming. I think all of us holding and investing in crypto are watching the news, watching what's happening, following people like Cryptocurrencies who follow this every day and are looking at, okay, well, what is the response maybe gonna be? Will we be protected as investors? Regulations are not always bad. I mean, if you're losing all your money on a scam, who do you call? You can call a regulator, but it's an unregulated market now. So what I'm saying is you can't call anyone now. But they're figuring that out because they're realizing now, okay, well, this digital money thing has like trillions of dollars in it now. So we probably can't ignore it anymore. So that's what's happening. Good luck to them. Okay, we're almost done, guys. You guys have been amazing today. We have learned a lot of information. We're just going to really quickly recap week one. We talked a little about the difference between coins, tokens, and altcoins. So cryptocurrencies are virtual currencies that can be used as a store of value. and is a method of payment with transactions in a crypto coin conducted on its own blockchain or between blockchains. We'll talk about that. Bitcoin is really known as the only crypto coin. All other coins are referred to as altcoins. And tokens are a type of cryptocurrency that represents an asset or specific use of that currency and resides on a blockchain. So think of a casino and think of the tokens in that casino. So the tokens on the craps table, oh, this is a bad analogy, I don't know enough about gambling, but basically tokens often have nothing to do with the cryptocurrencies, but a token represents an asset, or basically an asset that is encoded in a smart contract and stored securely at a specific blockchain address. So tokens will be doing things on the blockchain, but they're not the cryptocurrency of the blockchain, but they can be. There we go. And an altcoin, as I mentioned, is an alternative coin to Bitcoin. Awesome. Let's recap a little more on tokens because that explanation was not great. Cryptocurrency tokens are fungible digital assets that can be used as mediums of exchange, so traded inside of the issuing blockchain project's ecosystem. There we go. So there are different types of tokens. We've got platform tokens, we've got security tokens, transactional tokens, we have utility tokens, and we have governance tokens. So we'll talk about all of those as time goes on, but that's just giving you a little overview of coins, tokens, what's the go. You guys, we did it. Week 2, cryptocurrencies. That wasn't so bad, was it? So we have covered the key concepts of cryptocurrencies. Now you have a little understanding of what you're getting yourself into on this crypto journey. So I hope that you connect with me. Here are some ways to do that. And I've given you a lot of information here, and I really, really hope that you guys can give me something back, and that can be subscribing and liking. And when you're out and you hear someone talking about crypto and how they really want to get into it but have no idea where to start, say you found this really cool channel and this girl called Cryptocurrencies is doing a 10-week course, and she's sitting down and explaining to us what's going on so that we can get in on this revolution and make money along the way and do it safely and connect with other people, and maybe you can tell them that at that party. So love you, thank you. So thank you guys so much, and I really hope that you come back for next week, week 3, episode 3, chapter 3 of my book, The Cryptocurrency Beginner's Guide to Cryptocurrency and Blockchain, which has this whole course and much, much more out very soon, hopefully. Crypto and fundamental analysis. So we'll be talking about that. Go back to that infographic, how to research a crypto, and we'll be talking about stuff like that in a lot more detail next week. It is knowing where to go and how to research a project and whether it might be valuable in future and why. These are the things that will arm you from scams and the hype cycle and rug pulls and pump and dumps, because you'll know where to go for the information. You'll know how to make up your own mind, and you'll be able to start, you know, having that, exercising that part where you start really thinking for yourself and making these financial decisions for yourself. And I am so happy and honored to be helping you guys along the way. I will not let this generation miss out on this revolution. Oh my God, I need to eat. I love you guys so much, and thank you so much for all of the lovely comments on my TikTok and on YouTube. We're 84.9 thousand followers on TikTok. It's really crazy, but if we can pump those up on YouTube, that would be great. Not to be greedy, but I've got a lot more to cover, so I want to help as many people as I can, and I will see you guys soon. See you next week for episode 3. If I don't see you before then, stay safe out there and happy investing, trading, and learning. Obviously, you guys, I'm not gonna do you dirty and not give you a shot of the kittens. Oh my Lord. Hi. That's chorizo and that's pimento. Okay, good chat. Talk to you guys later.